What is up, everybody? This is Dan Max, Shakespeare Realty, aka the Trading Agent. This is just a live market chat as the future's open, and just wanted to get everybody an opportunity to kind of pick my brain, get involved. If you're newer to the Discord room, an opportunity to ask a lot of questions about how the rooms work, what's going on, just in general, a whole lot of everything. I'm gonna hit the start button. I want to do mic check, let some people roll in. We'll get really cranking once this goes off, but hopefully you're having a good weekend. A lot of fun soccer to watch, football, whether it's the one with the round ball or the pigskin. A lot of good stuff. So excited to see how the future's open. I know we got a lot of little things we can potentially talk about, but newer folks, this is your opportunity to just kind of pick my brain, explain what we're up to, what the plans are coming up, how to just kind of look at the market. A lot of people, I think, have these mindsets of certainty versus probabilities, and I can guarantee the outcome if you're a certainty-based trader, and that is failure. So I appreciate it. If I can get a mic check, 1 2 1 2, should be good. Settings haven't changed. Hola. Got Shannon, Lupus, Eric saying hello. I will be able to check the Discord room on another screen. If y'all don't know, I've got an 8-screen digital tiger set up, so I got multiple screens rolling where I can watch everything. Mic is good. Very nice. Excited to really see how things kind of move. I mean, seeing a lot of, there's always the end of the year budget stuff. They always love to kick the can down the road. Seeing where the Republicans are posturing that they want to get rid of the vaccine mandate for the U.S. military. And they're using that as their one thing that they want to hold budget talks with. Like, that's their one sticking point, which is mind-boggling to me. You would think there's a host of other things that are pretty important as well. We'll see how that affects the futures. But budget deficits become pretty normal. The last time that we didn't really have one, late 90s, Clinton. Imagine that, the Democrats. I mean, again, parties are always flip-flopping, and it's all about getting elected. Last time we had balanced budgets and no monster debt. Yeah. Anyway. If you got questions, please line them up, tee them up. I'm here for you guys. I mean, a lot of people, I think, have probably some general questions either about the Discord room, about the markets, thought processes, everything. I mean, you could watch all 53 of the Back to Basics videos, or you can just pick my brain. I mean, I should be doing more of them, but there's a lot of topics. I mean, you could go into endless videos on this stuff, and people are like, well, how do you know this stuff? And it's like, well, you struggle, you learn, you grow, you stay at this, you eventually everything comes to fruition tested wise. That's the thing about the market people don't realize is, like, you can't really pay for experience. You get notes, you get tons of insights from videos, you study, but until you actually live it, it doesn't mean as much. That's what I always tell people. It's no different than in reality, right? I got a finance degree from NC State. When I got into finance, they're like, oh, this book? Yeah, what you learned? Doesn't matter. I'm like, oh, okay. Again, got my real estate license, and, obviously got that one many years ago as well. And you study all this stuff, and you go start doing real estate, and you're like, oh, this is just how not to get arrested. It doesn't really tell you how to really run a real estate business. It's pretty funny how all that works. But, and like anything in life, right? Experience. Like, the people who are newer to trading, I mean, you guys don't realize, like, the amount of knowledge that you just can't absorb through 1 or 2 years of trading. You just can't. Unless you do what I recommend, which is play the guess the next candle game, go back in time and really, really try to predict how the markets move day to day, not hour to hour. I mean, you can do it on the hourly, but Then you get more focused on like the initial opening and the close and lunch chop. I mean, you've seen the statistics. Like if you would have buy the close and sell the open over the last, I can't remember how many years it was, but if you'd done that, like it outperforms the market, like by, I think it was like 10,000% or something silly. But anyway, all right, futures are opening. Got another minute, just letting people pop on in. Futures opening down, moving lower. Not surprised. Is there really anything good from this weekend? I mean, I'm looking at it from the perspective of, I'm seeing headlines where Russia's about to step up their game here. I mean, and again, is anyone surprised? If they're going to talk about capping oil, they're going to be doing what? And be like, okay, well, we're just going to push on then. You're not really giving us any reason not to. All this stuff, again, it's not about politics, red, blue, whatever. It's about green, how to figure out what the next moves are. All right, looks like we got enough people in here. If you got questions on the Discord room, I can see. If you are, start teeing up questions. This is for you guys. All right, let's do this. I'm not recording this. It's just going completely live. I want everyone to get in here. I mean, if you want, I'll just start off. I mean, let's see where oils. I can't remember if these. Oh God, I hate TradingView. Something changed with it recently, with the way that if you click on it, it seems to go right to the previous thing you're watching. Oil going nowhere at the open, kind of like the futures. Anticipate we will move up. I mean, if you want, I can talk about oil for a second. I mean, we talked about in the last couple of weeks how, Wall Street Journal, all these news outlets talked about every potentiality with OPEC cutting, raising, doing nothing. Well, they did nothing. And again, that's after they've already cut or projected to the end of the year. Do they want to help Russia or the BRICS in OPEC? I would think so. Are they really going to be involved with trying to help the U.S. and Europe get lower prices? Doubt it. U.S. got what, 200 million plus barrels to refill the SPR? Good luck with that. Oh, we're waiting for $60 or $70 oil. Okay. Yeah, we'll see about that. I mean, that's where the ultimate question becomes, right? Like we've talked about how I think oil, and this is where, again, you got to love when it holds long-term support. This goes back all the way to 2005. The mid-70s have always been very important price level. You retest it, you doji. Here we go, right? Is this the start of the next run? A lot of people are like, well, what do you, where's the volume at? And it's like, I'd like to watch the USO because it's the US version of it, of oil during the trading hours that I'm, trading at. People are like, why don't you trade futures? I'm like, man, I wouldn't sleep if I traded futures. It'd be like never being able to leave the casino. You retested this range low, and look what happened. Big dog showed up. Then you retested, and look at that. Open at the lows, close at the highs. Now you got up into some levels, which, again, not surprising. Took a little break. Here we go. I think this is how, again, if you are bearish, if you're new to the channel, you're like, hey, I'm bearish. I think you're a long-term bear. Yeah. But what are the precedents we've talked about? Feds are in the sweet spot. The ultimate sweet spot, because you had lower inflation, CPI coming down, interest rates have been coming down. Just the perception of the economy. Remember, GDP is going to be 2.9% for the third quarter, spending on Ukraine. Every time you see a stimulus or some sort of money allocated for sent over abroad, just remember that goes into the GDP calculations. It's just, we're in the sweet spot. And the next thing to get the markets to go tankerton is going to be what? No pivot, higher interest rates. But keep in mind, when the Feds do pivot, typically the market does follow, because if they're pivoting, it means stuff is bad. They're going to try to hit some sort of rate, potentially 5%, and just want to stick there. What we want to see is if the market's going to be crappy, it's for them to have to continue rising, right? Like that's going to put the kibosh on everything. Choppy markets, this is the thing. If you study the 70s, you've been in the past, it just, as much as I'd like to say, hey, good luck, buy a ton of puts and short, which with the VIX levels makes sense. Have time if you do that. Just doesn't necessarily mean it's going to tank, right? You get seasonality of the December, January effect. And if you study the past, right, which hopefully all of you guys do, notice how the market did hold up last December, right? Right? Oh, you don't remember that? Oh, okay. Well, here you go. Had some drops, chops during OPEX, then made the January peak, and then are we potentially in for a December chop? Are we in the potential December? Like, yeah, I mean, it looks like this 394 level. And as we've talked about, if you're newer to the channel, the best way to trap everybody and convince everyone the bull market is actually starting would be to break the channel, break the 200-day, get everybody so excited. Because remember, the market is a liquidity-based game. To get every bear out, just like they get every bull out at the lows, sometimes you have to break above price to trigger the headlines that create the endless, oh, damn, the bull market's on. And people don't understand. Like, I use sentiment in the Discord room, but I also use it from the people that I've been involved with and known for 20 years. Like, I will get probably 3 to 5 calls, text, emails when the market is making what supposedly will be the new bull market. I haven't gotten those yet. I still got people going, oh, the economy sucks, the market's going to tank. And it's like, well, maybe we're not there yet. All right, I don't want to do all the talking. Who's got some questions, thoughts, concerns? Because I think if you want to talk about just with the market in general, you can watch the recap. Market recap, the live one, I think is always better because at the end I get a little deeper into it. But at this point, it just, futures down a little bit. Nah, nothing crazy. Not surprised, but I'm telling you, I expect. Remember we talked about here when we predicted the top in August. We had a top here and we got stopped out. That happens again, being wrong. I hate when people are like, oh, I'm never wrong. You got to follow this guy. He's always right. It's like bull crap. Nobody's always right. It made sense here because it was a previous levels of importance with high volume, right? And they said it's either going to short arm the 200-day, hit the 200-day, or go above it. Well, since it was the third touch, remember we talk about threes. Market is loves to create a sequence based on 3. And then after 3, that's when it gets a little tricky. 4 will not be probably the lucky chart, right? I'm thinking that's where I think we'll get over this. So, is there a bit of a mini inverse head versus shoulder on the U.S. oil chart? Okay, awesome. Thank you for the question. Let's get into it. Inverse head and shoulders. You trying to say that's the left shoulder, the right shoulder, here's the head? Potentially. I mean, you could argue that. I mean, I bet if you look intraday, might be looking a little more obvious. Yeah. No, I see it. Left shoulder with volume, right shoulder retesting light volume. Makes sense to me. Makes sense to me. I mean, yeah. The problem with like putting formation like guarantees into play, I would say this is more of the head, like the inverse head and shoulders. But here's the thing. I think, Jordan, I think you've been around. You've seen this. We've seen like head and shoulders within head and shoulders where you get another shoulder within the shoulder. So it's like 5 bottoms. Like there would be 1, there's 2, 3, 4, maybe 5 down here at 78, maybe. We'll see. Maybe not, honestly. I've seen this a lot, especially with gold. Like here's that same repeating pattern, Jordan. Left shoulder, 2 shoulders, head, another right shoulder, another right shoulder. It's interesting how, you want to always assume that it's like, it's going to be a clean pattern. And from people who follow know, like we always assume chop, the worst, not even worst case scenario, just one touches are never the key here, right? It's always some sort of retest, always something. Chop, higher highs, lower highs, equal highs. Here's a higher high fail. Here's basically an equal high fail. So we'll see. I mean, you have now, in my opinion, is the double bottom, right? We got the double bottom. Here you go. And I don't mind the traps, man. I don't mind the traps because this is the thing. You see it when you take out lows. Y'all, I think a lot of y'all, again, if you're not familiar, just check out old videos or hit me up. Talked about gold, how like this bottom here, it was just one of those things you got to buy it. It's a bear trap. You retest, here's a third time, breaks below it, closes back over it, professional gaps, and goes. Like, that's just sometimes that easy. Sometimes it's not. But I don't mind the look below and fails as long as you get back above. Like, that's the key, right? Like, that's the key here. It's not like, all right, oil tanked after it broke those lows. No, it bounced right back. So that's the key. Gotta love the traps. Because, again, the market is a liquidity-driven game to knock people out right before something happens. I don't know how many times this happened to you, but I feel like it's the story of my life and not understanding that the first 10 years of trading, how the market would retest and it would take out lows or take out highs, and then it would turn around later. And it was like, oh, it was playing games. What time does Nat Gas start trading? I bought around 3:30 p.m. Friday. I would think the Nat Gas futures... Again, I stopped paying attention to that stuff years ago. I used to know all that stuff. I'm pretty sure they should be open now. I'm pretty sure they're open now. Someone can double check that, but I don't have the time to Google it. Is there a historic bear market that reminds you of this bear market? NASCAR All Out. Dude, that's a good question. Because I've been looking back. I've got Markets in Motion by Ned Davis Research that has every decade lined up since like the 1800s. This feels like the 70s. It feels like the 70s, right? But then you got to throw in the tech bubble with 2000s. I don't think it's like a 2008 where you're going to have banks and commodities crash. I think they'll hold up better because I think that's what's going to be the key here is that we've structurally underinvested in housing. There's a housing shortage. Underinvested in our energy resources. And we've underinvested and underthought about this new green. I mean, we're not going to go new Green Deal, but we want to get more green. Like, we're not there. So we got to invest in commodities, right? We got to invest in all the metals. So it's pretty hard, man. It's pretty hard to, like, say what this is like. And that's where I think knowing a little bit of everything. That's why I feel like the 70s, if you study the 70s, I wonder if I could pull up the 70s on this chart real quick. Dow. How does it I wonder if DJA. Again, I don't remember all the tickers for... There it is, DGI. I mean, they're usually pretty same. I've got e-signal. Let's look at this. Let's look at the 70s, if you got a second, because that's a great question. Let's actually go monthly. Just go back in the time machine. Yeah. If you study the 70s... Look at what happened here. You had essentially a decade of chop. And you peaked, what was it, 69? No, it's 72. Then you crashed. You didn't bottom until 74. You bounced back to the highs, and then you went nowhere for like 3 years. Now, no one wants to hear that. Right? But if you do like the math on what the percentages wise, like you got some pretty big moves there. You got 500. I mean, that's crazy. I only think it doubled. But, think about the monetary base. It's quadrupled or whatever. I think we could be in this period where it could be something similar to that. And then you go, obviously the DJ is not the best formation of like what we would tech, right? 99, you pull back, right? You have like this crazy broadening, like, up higher highs, higher lows. Then you break out to the upside. This is where I think, now, again, I don't know what the downside is, but I would be guessing it's somewhere in the 20,000s, right? Somewhere around, somewhere around here, I would think would be somewhere in the lows. But will it get there right away? No, probably not. It could play this game. But a lot of it, this is where people think, I think, too, like, you want to marry a belief, right? Like, that's just natural. Like, you want to believe that you're getting into a trade and your evidence won't change. And that's what screws people up, right? Because imagine staying bearish the last 2 months. Think about how many people are getting blown out, right? So with that kind of mindset, now this is why I think, actually, I like to look at I like on my charts better. We've talked about how the Dow's been leading, right? IWM's been leading. A lot of these broadening patterns coming into play up here, and I think you're going to see another one here. That's why the Dow's leading, because it's got more. It's not as tech heavy, right? It's not crappy tech. Same thing with IWM, right? It's not crappy. When I say crappy, it's sad. It's just people don't understand the rotation of out of tech that takes years, that will lag forever. Well, not forever, for years in tech because of inflation. Tech hates inflation. It's a deflationary. Tech is deflationary by nature, and if their margins can increase by law of large numbers when they create more product, then they struggle. So it's tough. Nat gas down 5% at the open. Oh, is it? Oh, freaking gas, man. What was the impact on prices from oil and the embargo back in 78, 79? I mean, now that's a good question. I wasn't trading in the 70s and 80s, but you had the same thing where the Feds had to continuously raise rates, right, to like get the problems under control. And that's where I think being in real estate, a lot of mortgage brokers and real estate are like, oh, rates are going back down later. And I keep telling them, like, probably not. Keep in mind, real estate doubled and tripled in the 70s and into the 80s because of inflation. But I don't think you're going to see interest rates getting back down to 4 and 3%. Like, these people are like completely convinced. And the only way to do that is if the market tanked. Well, it doesn't feel like the market's in this crash cycle again because the Feds have not constricted enough. Now, I know they're tightening their balance sheet, but these guys are going to try to walk the tight line. With GDP at 2.9%, that's not crashing. That's not economic activity crashing. Expecting the amount of oil in the AM, it's always tough to know how things are going to play out overnight with low liquidity. That's why I always tell people, like, that's why I don't watch the markets that hard overnight, because I've seen things change what seems in like minutes. Like literally minutes, things just happen, over quickly. And it's like, man, you could sit here and watch, and then everything changes at 8:30 a.m. when news comes out. Or if you've traded gold for any period of time, you've seen how like low liquidity overnight just creates opportunities for market makers to manipulate price action. Like, it's just brutal. So, any questions? Again, this is for you guys. I could just sit here and talk. Yeah, nat gas brutal. Ugh. I'm glad I didn't add on Friday, but brutal. Yeah, I don't know. Nat gas still stands on an upward trend, yet it was a roller coaster ride. Friday was violent. What would you cause to pivot your view of nat gas? I mean, your pivot point in your mind has to be what you're willing to lose, and then you can always get back in. That's, again, where some of my best trades, and I tell people all the time, is the trades that I got out of. The ones that I didn't sit in and just ride to the dirt or wrong. Like set in your mind what you're willing to lose and then just move on. Because that was the thing. I mean, we like nat gas up here, and I still remember it broke, and I'm like, I'm gone. And then it just went, and people are like, oh, I'm holding on to it. Oh, if you're trading around it, you're good. I mean, it's just, trading. That's another thing people don't do a lot of, is trading around positions. They just buy and hold and go, oh, I hope it goes to, I hope this is Bitcoin. I hope this is going to the moon. And it's like, nah, most stuff doesn't. Even if you did, having a little bit is better than having none. And then also, too, if the 1 out of 1 billion movement in the market happens and you catch it, you'll still do okay. It's just, again, trying to play the probabilities. It's like, not everything is a moonshot, and but that's what everyone wants to believe, right? That every idea they get in is just going to the freaking rip. Yeah, we'll see what happens. I mean, this is the thing. I feel like, you've got that Freeport issue going on. This next green zone is pretty important support on nat gas. I keep telling people, it's like, if the price stays too low, it just also leads to what? More demand. It's like price caps. You try to cap the price of something, and people are going to try to absorb every, ounce of it. Whatever you want to call it. Oh, what do you got? SHPH. Oof. IPOs. All right, well, here, you want my opinion on IPOs. This is where it gets in. Yeah, again, I'm with you on that, Eric. It's just not, how it is. Nat gas is the widowmaker. It's like silver. What is your question? I was interested Friday. Man, I hate penny stocks. This company. Here's the biggest problem with companies like this. This feels like a pump and dump, man. On SPH, I don't know what's going on with it. I could care less. Now I see the volume and the close and the price action. But here's the biggest problem with stocks like this is that from $3 all the way up to, what is this? Shuttle Farm. Oh, it's a pharma company. Come on, man. We don't know what the hell's going on with these. Anybody bought it from $2.50 to $125 is looking to get even. I hate trying to predict where the sellers are going to come back in and just say, freaking A, I'm out. I'm back to even. I'm done. I don't know where that's going to be. I mean, I see the volume, but I mean, $2, how many shares did it trade? 18 million shares? I mean, that's not a lot of money. I mean, that's just not a lot of money in the market. When you think about the trillions of dollars of liquidity that flush around every week, 36 million, I don't know. Your guess is good as mine. I hate penny stocks because they're pump and dumps. I mean, if you've watched The Wolf of Wall Street, that's literally what they are. I mean, once you get pink sheet, off market stuff, I mean, it's literally all about pumping it up. And the rips are huge. Commissions are, again, the spreads between the commissions and buys and sells are ridiculous. So, yes, Joe, China reopening. We called that one. And again, I love to give Roth credit for that. And again, if you bring something to the table in the Discord room, I'm not sitting here taking credit for it. If I'd love praising other people. Because I appreciate it. Like, we talked about how China's peak COVID policy, zero policy, but then hospitality stocks in China were up 7 to 10%. I'm like, nah, someone knows something. Oh, and then like a day later, literally, they're like, oh, we probably won't be able to do that. Yeah, zero COVID policy is like trying to get rid of the flu or the cold. It ain't happening. Good luck with that. Buena suerte. So, yeah, man, I hate these penny stocks, man. Good luck. I mean, this is a pump and dump. I mean, how high could it go? I don't know. The first liquidity, maybe 5s. Good luck with that. Just not a fan of penny stocks. People think they're going to get rich off of them, and they don't realize that the best stocks do not ever go below their IPO lows. And if they do, they don't get into single like penny land. They don't get into the penny land. Like this is just a vehicle for trading to reel in suckers. Pharmaceutical companies now, as someone who has connections in the medical space, pharma companies are really hard because all it takes is one person in a study getting killed or something happen that goodbye, stocks get crushed. I don't mind trading some of the larger pharma companies because the likelihood of, they got the cash or, they've got other things that can support them. And usually, when they invest money in a company or an idea, it's because they think it's going to hit, they're not, throwing dice. They're definitely not throwing dice. Yeah, pharma companies, man, I've had so many horror stories with it. Just kind of gave up on it. That's why if you really like pharma, play the bio ETFs, like the basket. Because even big news in one company, sometimes if the top holdings can move that ETF pretty good, versus like you buy the company and then all of a sudden, goodbye, lose 50% overnight. Because this is the thing, people don't realize, like, your goal is not to lose large amounts of capital. Now, Livermore would talk about this too. Like, do you want to be safe and make guaranteed money, or do you want to gamble and lose? Well, keep in mind, inherently from gambling with higher risk comes higher reward, but also the opportunity for total loss. It's the same thing with options. It's like, yeah, if you trade options, you don't just sit there and you hold them like an investment, You trade them. Or if you got long dated ones, you trade around them. I mean, it just is what it is. Any more thoughts, questions, concerns? I mean, I'm here for y'all. Give it to me. Oh, man, I do. Yeah. I mean, those penny stocks and all that Chinese stuff. I mean, you're just... How do you... I mean, here's the problem with this mentality, and I'll end it on this, is that if you were playing the game to gamble, you're not treating this like a business. And if you're not treating this like a business, gamblers always lose. The casino always takes your money. And unless you're like taking money out of the market, we've talked about that. Like most people don't. Like you're just growing a bigger pie to get murdered. People start with 5,000, turn into 100,000. Now they're starting to bet $100,000 on trades versus, all right, you took 50,000 out, you live off of that, you pay yourself, you pay your taxes. You got to earn your trade size increase versus just thinking that you're good, because that's what happened to me. I mean, I started off and I made a absolute butt ton of money, thought I was smart, and lost 90% of it. And that happens to mostly everybody. All right, got a bunch of questions come in. Let's do this real quick. Solar continuing up or oil down? That's something got to give. Add Tesla with that. Joe, that's the thing. I mean, if oil and gas are holding up, which obviously not gas, not at the moment, it's hard to short solar because we expected what? The big red wave. And then again, politics didn't matter. I mean, that was what they're projecting. Well, then all of those credits for solar were going to go bye-bye in the new year, and the market would have priced in solar going down. Now with president having the Senate there to help block this stuff, I mean, it's hard to know for sure with solar near term. That's why I'm like, I'd rather just wait for the market to look ready to pop and get busted before I short solar. So how about AG's lag to silver? All right, this is a good question because we talked about this in the recaps, as you probably know. AG did not look right. Like, you know what I mean? Like, we've seen the miners starting to look funny. Now, silver, wow, that's a tongue twister. You would think as silver's making new highs, right? AG would be leading. Do you see there's a big problem here? We talk about miners leading the metals. This doesn't look right. We all agree that this doesn't look right. AG should be at 1050, maybe even 11. It just ain't. That's suspect. Sus. We'll see what happens. Maybe it catches up later, but at this point, like, that's got to be a red flag for metals. And also, too, we talk about the seasonality. There's usually a dip in December that leads to the rip into the spring. I'm waiting for that. We sold all of our metal stuff. I know some people are short miners. I mean, it makes sense. That drop coming at some point. It always happens. I mean, you can watch previous videos, or I can do it here in a little bit, but I got a few questions. Dan, what do you look at the UNG? What levels are you thinking to determine if you're at a stop out? I think UNG might be a gap number 3. Good question. UNG. I'm glad I did not go bigger. I know a lot of people are adding Boyle, and I'm like, man, I don't know. UNG at this point, like, it's got to hold down in those 18s, like, or I'm out. Absolutely gone. For just let it go. Nat gas on the futures. It's basically like that low 6s, if I'm correct. Yeah, I don't want to see it break, because then that doesn't look good. But I mean, you could get there technically, and it could still play this game. You don't want to see it. I know a lot of people are going to be drawing a trend line and connecting. We've seen how it violates trend lines temporarily a lot. So this is hard, very hard. JKS is another solar stock. I remember Genco. I haven't looked at them in forever. Man, all these solar stocks used to be hot back in 2000. So hot right now. Oh no, sorry. Did you say JNK or JK? Yeah, JKS. I'm like, man, you just typed in the wrong thing, you dummy. It's interesting. Let's go look back at the monthly. I remember this thing from back in the day. No, maybe this is different. Maybe they went bankrupt. Did they go bankrupt? Somebody confirm with this, because there was a lot of solar issues. Because it's like some of the coal names. They disappeared for a couple of years and then they re-IPO'd. Okay. Yeah, this looks better on the daily. Look at that. And these things don't really look that bearish, right? I mean, I don't know how you want to draw the trend line. Let's kind of like finagle it to fit. Yeah, that doesn't really look that bad. Plays games. Sometimes we say don't bring a ruler. Like, you could say, yeah, I mean, that looks pretty good. What do you think about bullion vault? I have exposure to gold, silver to avoid high commissions in a long-term hold. Bullion vault. Oof, I don't even know much about them, my friend. I'm just going to say I like physical, and I like to know where it's at. I don't want anyone else to hold it. I'd like for it to be in possession of me. Because I struggle with the paper game, because we've all said this and talked about it. Like, when the paper game blows up, I have no clue what happens. And that's always a possibility, right? Does that lead to big drop from prices, or the big run up? I don't know. Paper, silver, paper, gold, all that stuff. I mean, it's dangerous. I don't know. I don't know. Let's just say I like to hold it somewhere where I know I can access it, not with somebody else's like bullion vault. It's kind of like me holding on to my my baseball card collection, and my, not all baseball, but card collection. Like, you can now store these things at eBay and store them at different websites, and it's like, what happens if something happens? You know, like, I just don't want to add the extra risk. I apologize, man. I don't know. I like bullion though. I mean, but here's the thing: if you want to have like the conversation, I keep telling people, you know, if you're buying just silver and gold coins of bullion, like, yeah, you're gonna do okay. If you actually believe there's going to be a huge boom in gold and silver, you got to buy rare, and you got to buy stuff that will attract the public. Dem Diggs was asking about some things, and he was buying like these silver proof coins that were super overpriced. And I'm like, who's going to buy that? Like, the design on it was nothing special. I was like, you're talking to collectors only, which again, that can do okay, but you have to think about like limited supply and things that people are going to want. Who wants to buy a limited proof silver coin from Mexico? I don't. Like, you know what? I think like with the masses, like, it's like NFTs. Like, if you're going to get this big blow up move in like gold and silver coins and collecting, you want the stuff that's very rare, artsy, very pretty, looks good. Anybody would like it. I have that conversation all the time. And if Lupus, if you're on here, like those coins we bought, though, what were those things? They were the, not Captain series, but they were like, I don't know, they were like historic pirate ship coins print. And I think they only made 10,000 of them total. And we bought them at like $50-$60, and now they're selling on eBay for $120. And it's like, yeah, because people like these things. Like, they're limited edition, and they're very cool looking. Like, no matter what, like, you have to, you know, anybody would like them, kind of thing. Like, everyone likes history, right? Like, everyone likes very pretty coins that are etched with great designs. If it's just a generic coin that they've made millions of them, that's why I'm like, I don't really like Silver Eagles. I used to buy them, and then I sold them all. I'm like, oh crap, I'll buy other coins. And all these other ones doubled and tripled, while Silver Eagles will, you know, they'll hold value, but they're not going anywhere. Could see movement in VIX and or DX this week, or energy FUD. I think Fed is quiet period this week. Yeah, I mean, they're probably not going to say a lot from what I've seen coming up this week. I don't think there's a lot of Fed speak. You've got some earnings, which is interesting, on Thursday. Monday, you got factory orders. You got Toll Brothers on Tuesday, which I'm interested to see what they say. Productivity, yeah. You got some, and you got the PPI on Friday. Oh, NDAQ short. Man, this one has been a typical short too early, short in the market doesn't work kind of thing. And so, yeah, I was thinking somewhere in the 70s. We've talked about how this is like the Coinbase for tech. You know, like, once the tech bull market is over, which technically it is, and the liquidities dry up in those tech names, like, people aren't going to be trading them. Like, the NASDAQ is going to be just totally crap. But it rises with the market. Someone's like, head and shoulders bottom. Like, yeah, technically could. So maybe you get back up into the 70s. Hence, I mean, we shorted way too early and stopped out. But thankful stops did, because it's like, all right, the market's floating higher. This crap ain't dumping. The VIX is always interesting, because I think a lot of people don't. Remember how the VIX is supposedly broken? And we're like, is it? We talked about, like, the VIX did not confirm the market breakdown in October, at the end of September, right? Well, here we come back down. Don't be surprised if you get like this, like, choppy. I mean, even, damn, I mean, are we getting down to 15, 16? I don't know. But it seems likely we could get into the 18s and chop. Where are you at with the XLF? Good question. Talked about this in the recaps. This is starting to show potential weakness because I've talked about a lot of people were wanting to short it earlier. Here you go. Talked about broadening patterns, megaphones. You had one at the lows. Why wouldn't you have one at the highs? Well, you got it. And look where it hit. I still think you could get up into 37s. 36 is high if the market holds up. But the risk reward is starting to get real juicy. Because if the market does eventually catch feelings and issues, financials are going to obviously get beaten for it. They always do. So if you're shorting, it makes sense. It kind of feels like NDAQ. It felt right, but then it just kept drifting higher with the market. So I'm struggling with shorting right now because I want to see the FAS up here. Obviously I don't really chart this, but it's looking like somewhere near 90 would be probably the best risk reward. But when the financials go, they go. They're just like, especially the FAS. So that's a good question. FAS. I guess it's FAS and FAS. I want to short the FAS. I don't really like longing the leverage ETFs as much as I like shorting them. And you can buy like really dirt cheap puts out far out. I know technically it'll be expensive based on premium, but if you think a big move is coming, last time went from 93 down to 50. If you bought like the 70 puts out to February, probably do okay. But we'll see. It's a good question because I'm salivating over here. But we talked about Real Men of Genius, Jamie Dimon, telling everybody to sell all their stocks. And here to talk about look below and fail and rally. Pops right back and said probably going to get up into the 130s and 40s. But think about their quarter. If they're doing great, man. They told everyone to sell. They were buying. They were telling everybody to buy puts. I don't know if people remember this. A lot of y'all know this. How they recommended buying puts in front of CPI. They recommended buying puts in front of the Fed meeting. And obviously, they were probably selling puts to everybody. Well, the dingo's got the baby. Like the new Willow. They just freaking ransacked everybody who listened to them, which is hilarious. People don't realize, like, oh, you see this broker said we should do this. It's like, you probably shouldn't. Dan, I know you said many times the 706 is tricky on Fib. I'm short gold and should be concerned with the POC fibs. Is there any other weird stuff gold does in spot? The only thing I'd be worried about with shorting gold is the budget deficit or the budget talks. 786s are notorious in gold. That's the only issue, is that you could see a little bit of a pop because you got that, they got to negotiate the budget. And right now it seems like the Republicans are holding their guns on making sure that the military isn't vaccinated, doesn't have to be vaccinated with COVID vaccines. So if they hold to that, could gold hold up? Maybe for a minute. Someone was asking on the Discord room. Can we have a NASDAQ blow off to the new highs before the short? When you say NASDAQ, I'm assuming you're talking about NDAQ. In June 60, look pretty cheap. I'm going to wait a little bit. Santa. Yeah. You could always make new highs. That's the thing about trading here. It's like, because these questions are great. And you have to think like this in your mind. Like, this high volume near the highs is probably more distributed than is an accumulative, right? But it doesn't necessarily mean you can't go higher. Like, look at this crap. I remember this. Where was that? Come on. You thought this was the top, right? Like, you thought this was the top. Come on. No. And then it comes and makes a little higher high. That happens a lot in the markets. And this is where I always talk about, like, the market's meant to take the most amount of money from the most amount of people. And a lot of people think, like, one touches and just, it's always easy. And that's where if you study and you play the guess the next candle game, you start realizing, like, all right, like, there's probabilities of certain things happening, but unless you see volume, sometimes you don't know. Like, people were like, how do you know AA bottom, right? Like, we were screaming in the 30s, screaming it. Like, ah! Well, here you go. Here's your, high or low, but big dogs. Like, you and I ain't stopping this. Like, everybody in this board, no matter how much income we have total, we're not stopping the drop. This was like 37 million shares. Like that's the big dog stopping power. And then even then you had a retest, but then the professional gap. Remember we talked about professional gap start the move. Like that's game on. Looks good. So this is what I mean. That trading. Again, it's probabilities. It's when you start locking into beliefs that you can't be wrong and going all or nothing trading, like shorting NDAQ at the highs, all in, bam, fail. Buying like natural gas on dips, all in, fail. Like you just gotta sometimes be like, all right, well if it goes lower, cool, and if it goes higher and I don't have my full position, that's fine. But at least if I'm wrong, my loss is smaller. JP Morgan projected improved home builder sector a couple weeks ago. Buddy pass. So obviously I have contacts within the home builders sector. I know for a fact builders have just cut down their build going into next year. Like they're just saying like, listen, we're gonna slow our roll. Is that better for home builders? It probably is. It's kind of like how Facebook Meta stock did really well once they started cutting the fat. If the home builders are not taking on speculative spec builds, I mean, it's probably better for them near term. Now, it could be a penalty to them later when if inflation comes and the spring comes and people need to move anyway. Because again, we got such a crazy housing shortage, like inventory wise. People don't realize it. Like that's why it's like, if we find that the rates drop dramatically, buy as much property as you can. I don't care if people are calling for a crash. You just can't have a crash with a shortage of inventory. Now we were like, oh, well, the foreclosures are coming. It's like people don't realize 43% of houses in the United States have no mortgage. Then you throw in like the other 50% have like interest rates below 4%. And then another third have like, or 2/3 have below 3%. Like people aren't selling. They're not underwater. This isn't 2008, 2009. It's nothing like that. Like when you're building 25 million homes a year, now we're building 5. We might even get down to 4. Totally different. Like you can't have a bubble without supply issues, right? So again, that's my rant on that. And if you decide you want to buy something, please hit me up. I'd love to be your referral agent, put you in touch with one of the great agents in this country, and you'll get 2 agents for 1, because then I'll be involved. I get a small cut. It's no different if you go to any generic website and you look for a house and you say, oh, hey, Zillow, I need to find an agent. Well, Zillow will take a small cut from that agent. And that's pretty standard for real estate. But here's the thing that I think people don't, like I love helping. Is like once you get your first one in, the goal is 10 properties in 10 years. If you're not thinking like that, that's fine. Start with 1. And yeah, is real estate sometimes hard? Yeah, again, you can get in different niches. But the goal is to find passive income. You're taking money out of the market to pay yourself a passive income. If your trading accounts is your whole goal and you're just buying dividend stocks, which those folks are notoriously undereducated, because at some point, dividends get cut in bear markets. At some point, the law of large numbers says a company cannot continue to grow. Now, again, certain ones do better than others. No one's going to argue that. But do you want to take on that type of risk? Like if housing in the area that you're in is going to appreciate, do you think it's going to do better than Procter & Gamble stock or J&J? Probably, especially over the long term. And you'll collect way more in income, and you'll have tons of tax write-offs. You're not getting a tax write-off for that dividend. No, you're not. All the expenses in real estate, I mean, you guys know, some of y'all might not. I mean, there's tons of tax benefits in real estate. Tons. Write off everything. It's an investment. Basically. Man, VALE Resorts on Thursday too. All right. Any other questions? Anyone have any like newer folks in the Discord room around? I can see your post. I think a lot of people don't take time to watch. Now, again, I understand you can't watch all the videos at once. I would not recommend it. Take them slowly, but look at check the different rooms. There's, I have recommended reading, and it's literally 3 books. Have the Stock Trader's Almanac for 2023. Always, because it's like the Farmer's Almanac. And now, again, can it predict rain on June 22nd, 2023? No. But it'll tell you what the season is and what's projected and what potentially should happen. Primitive Stock Operator, if you've never read this book, or honestly, I choose the audio because it's 8 hours, and I listen to it all the time. Because every time you listen to it, a nugget relates now. It's basically how the operators work within the market. Nothing's changed other than speeds and computers getting involved. People are still idiots. People still have emotions. and understanding how the markets work from the operator's perspective. And then volume price analysis. Now, again, I love Anna Cooling, but I still don't follow her trades because I think she doesn't follow her own rules, which is ironic sometimes, where we talk about reference articles. I don't think she follows these rules. She still doesn't think about sometimes the operators. So if you put that together and then you put in how we trade, when you look at volume at price zones, you think about fibs, you think about moving averages, you think about retest, you think about how the operators work, you put it all together, your odds are way better than just being volume analysis only. Because I tell people 90% of volume analysis is nothing. It's only when it matters, and it's big volume or big moves without volume. Like, you're looking for anomalies, not necessarily looking for like a strict system. Like, it's not like, okay, volume, every minute I can tell what's going on in volume. No, it doesn't really work like that. Volume price analysis, as we've talked about, and most people don't pay attention, like, this is what you're looking for, the anomaly on the daily. Now, you can see it intraday with traps, right? You'll see it with like bull and bear traps with volume, like knocking the stops and then turning around and flipping. But it's not like every minute I'm watching the volume and going, is that bullish or is that bearish? Is that bullish or bearish? No, I'm not really thinking like that. Because you just don't know. I mean, and also, too, it just doesn't necessarily work like that. Because one trade doesn't make a market, right? One trade doesn't define the trend. So if people try to do that, like, I'm always like, you're sitting around watching volume all day trying to interpret it. You only need to really pay attention to volume at inflection points and potential traps. In between that, the market can float up and down on like volume, as you've seen. And it doesn't necessarily tell you where it stops. Like, that's where I'm always telling people, like, don't watch the 1 minute chart. Watch the 10 minute. Watch how things line up over the period of 10 minutes. Because no different than the daily, you get in retest, you get the schnit in intraday. You get like these moves intraday that are very similar, where it takes 3 days, 3-day ranges. We talk about maybe it's 3 days on the 10 minute. Well, so it's 30 minutes. Maybe it's even an hour. You don't know. Sipping on coffee this late. I don't know about y'all, but coffee, cocaine, marijuana. Be careful. Don't use them in high quantities. Actually, don't use them at all. Drug-free. But coffee's pretty good. Get you focused, or it gets you relaxed. All natural. That's the key here. Would you keep a house in California if you had one? Hard to get rid of tenants when they don't pay here. Well, that's where I always like to talk to the agents that people use, because somebody has to know all the ordinances and all the specifics. Like for me, I've got a guy in Summit County. His name's Pete Deininger. Works for the Breck Life Group. In Summit County, like literally, they're street to street, non-incorporated versus incorporated. All these little pockets within the area are changing the rules about Airbnbs. I know people want to buy up there, and I'm like, you gotta like know somebody who's literally got his pulse on this. So in California, I think what we've noticed, and hopefully history will repeat, is like when people start messing with housing, because this is what's happening in certain parts of the Colorado mountain properties, is that, yeah, LA counties are bad. Yeah, well, what's going to happen, right, is the property values are going to drop so much that it hurts the tax revenues, and then then actually like the municipalities start realizing like, oh crap, we self-inflicted pain on ourselves. So, but that's where it's hard. Where we'll because I think I read where California's gonna have another $24 billion budget deficit. I mean, will they just bail out these municipalities to let them continue to do stupid stuff, or at some point, now again, red, blue wave, whatever, like, will people flip back and start realizing like we are killing our own property values, we are destroying our neighborhoods, our cities by these policies. At least California's warm. It's got good, it's in the right parts of the country. So I don't know about the best investing. And that's where, again, I always tell people this. Like, I personally, when it comes to tenants, I screen my own tenants. Now, again, I use background checks, but I talk to everybody. Because you can tell when people are lying, or they're nervous, or you ask them their story. Like, hey, I read this, and they're like, why's your credit score? You listen to what they say. Their responses usually tell you a lot. Most people aren't, great liars. Like, they just, once they get questioned, they're like, you can tell very quickly, like, all right, you're not a good fit. Or you have to know a property management group, but here's again, who you can trust. Because property management groups, they're just trying to get someone in for you, right? And they'll cover it. Some of them will cover if you have evictions and issues, but why even get to that point, right? This is where the niche in investing, like I like nicer single family housing because you're not going to be dealing with families that are going to be like, oh, trying to get out, right? Section 8 properties, now that's another niche that, it works in some places, right? Because they got guaranteed money, right? There's guaranteed money in Section 8. It's just, again, like, do you want a slumlord and are you worried about people taking care of your properties? I'm good at statement analysis. I should do my own screenings. Yes. I'd do it. I love it, honestly, because it's when someone rolls up to rent your place and they got 3 months worth of cash in their hand, you go, oh, all right, you're trying to get in, you're giving me all this cash. Like, okay, who has 3 months of cash just sitting ready to, get into a rental? Like, are you trying to trick me into taking you on because you're a drug dealer where you got evicted and you're like, I need to just, figure out a getaway in a place and then I can screw someone over later. Like all these little things. We can talk about it. Always hit me up. I'm here for y'all. There's a lot of different styles of investing in real estate. It's no different than like in trading, right? Like there's some people like who have different risk tolerances. And it's the same thing. Like I don't like losing money. I'm risk averse at nature. So that's where, to me, nice single family housing, like the odds of losing are not high because typically nice single family housing appreciates in time in good neighborhoods, right? You got to know the HOAs. You got to know like the dynamics with demographics in your city or your state or whatever. But that stuff, man, it's Denver. Like, for example, Denver. Like, you buy within certain districts, like, people want to move here. Certain probably parts of California, no matter what happens, people want to move there, right? Know your, it's like know your charts, know your localities, right? That's where a good agent should be able to help you that. Be wary of realtor recommendations with renters. Screwed over my parents. Everyone gets screwed over at some point potentially in real estate if you don't do your own due diligence. It's like taking tips in trading, right? Like if you don't actually get involved in the screening process, well, then you're relying on someone else. And you don't know if they're going to have this thoroughness that you would, right? It's always amazing. People are like, oh, I'll take that tip from that guy. I've seen his trading. And then you go back and backtest. And you're like, oh, he's not that good, actually. Or his recommendations seem to be lucky. Again, like everyone couldn't lose. It's like in a bull market. Yeah, you got to do your own homework in real estate. But that's the thing. It's like you do a couple hours of work to ensure 6 months, a year of good tenants, right? Is it worth it? Yeah, I think so. Making sure people have good credit scores. Their credit history says a lot about them, right? Like people who pay their bills, who have never missed a payment, or say, for example, they only missed some maybe in COVID because something happened, that's fine. But if you look back at their history and they rebuild their credit, then there's not a problem. It's taking on, and that's where I've struggled with, we got our close on a property in 1st of October, and we've been screwed over because of the seasonality of the rental market. Like nobody's moving over the holidays, right? People don't want to pull their families out of school and move over the holidays. So I've had tons of people that I, applied for our rental, but I'd rather eat, and then this is opinion, again, I can cover this. I'd rather eat the rent than put someone in there that's going to trash the place or going to be a struggle. Because Denver has some also two very friendly rules for people who want to squat or, not easy to kick out quickly. But I don't want to deal with people like that. That just to me is more of a headache. What's your time worth? Do you want to try to sue them? You want to take them to court? You want to deal with somebody who might be crazy? Probably not. Any other questions, thoughts, concerns? Honestly, I'm here for you guys. You have questions, don't be embarrassed to ask. This is the humility within the market. Like sometimes you don't know, hence why you stop out, and humility to learn. That's the thing within trading. Like you can pay thousands of dollars to learn from people. Go right ahead. I've done that before. I've learned a lot of good things. And I realized, like, the best learning is me getting involved and actually annoying the shit out of these mentors and people that I learned from. They're like, everyone's scared to look stupid. I'm like, I want to know if I am stupid by asking stupid questions sometimes, right? Now, again, try to do your own homework before you just ask stupid questions, and essentially, but don't be scared of, what I might say or someone says to that. Like, it's crazy how, like, any sport, any game, anything that I've ever done, I've always tried to learn from others' mistakes. Because ideally, making mine costs more than learning from someone else's. That's why I always joke, like, people who donate to the channel, I'm like, you understand how you're saving tons in tuition and learning. I mean, my tuition is multiple 7 figures. Do you want it to be that high? Probably not. So, if you're doing well and you're learning, again, you're learning from my mistakes. You're learning from whatever your mentor. Doesn't matter if it's trading. Think about anything. Real estate. What's your favorite sport? What's your game? What's your weight? You say you want to be like getting into weightlifting or dieting. Like, again, you attaching yourself to somebody who can actually live the results and give you the advice. It's way better. Ideally, it's free. Again, I'm not scared of competition. I know I can teach this stuff and people will still not execute it, or they'll still mess up. I mean, it's why you always joke, like, how many people can be Steph Curry, Michael Jordan, Tiger Woods? Like, they'll teach you how to do what they're doing. But will people actually do it? No. They know that. All right. It's Sunday. Any more thoughts, questions, concerns? I mean, I'll let it go. Crude up 1%. I was about to look at that. It's funny you said that. I was thinking crude's probably going to rally. Come on. I wish TradingView. Oh, never mind. If anyone knows, I'll show you all this real quick. Here's my account. Dead Deeds. Let's go to my profile. Oh, it's not suspended indefinitely. Had a pretty good run here. They kicked me out. I created the VPA room there, volume price analysis room. At one point, it was one of the top 5 rooms there. And I told people that indicators were worthless. Stop spending money on stupid crap. And they didn't like that. And so I got booted off. Imagine that. Imagine telling people they don't need to spend tons of money on worthless indicators that they were selling. They didn't like that. Oops. Well, I was just being honest. You don't need a ton of indicators to learn how to trade. Things that follow price don't predict price. So why would you pay for that? It's like you want to have like 1,000 things you need to figure, the KISS method. Keep it simple, stupid. Do you want 1,000 indicators or you need 5 really good ones? Because once you layer on a bunch of coin flip indicators, now you're essentially a coin flip. You're not increasing your probabilities of knowing what to do. Come on, oil. Get over 81s, 82s, whatever. How important is sympathy momentum to your trading? When you say sympathy momentum, are you talking about, like, have you read Reminiscence of a Stock Operator? When it talks about momentum of stocks, like the leaders of a sector. Currently what's hot in the market. So here, this is a good question, man. Thanks, I appreciate it. Momentum is interesting because what's hot changes. Like money rotates. I talk about that all the time. Like tech is dead. It's fueling the commodity bull market for the next 5 years, probably, how many years it's going to be. It's just at times the markets don't, you know what I mean? Like, say, for example, like 3D stocks. Remember when they're hot and then they lose their momentum and then they're done and then they kind of bounce back? Or the marijuana stocks. Like, you have to be careful of like when the momentum comes out of a sector. But what is hot and what important, this is where maybe this is just me being old and I could learn something new. I try to stick to the leaders of the sectors, and I also try to stick to sectors that I trust. I still remember, like, in a Discord room, people were talking about SPAC stocks, and I was like, I remember SPACs. Like, they've had, different versions of this, and they all go kapow, right? And that's what ultimately happened. And so, like, with the momentum, like your certain names, you just got to be careful. That's why I don't like penny stocks. That's why I'm always worried more about what I could lose than what I can win, because momentum is great. Yeah, I typically am. Again, because that's the thing. Like, that's why we review the stocks every night, Mel. Like, that's why we spend 39 minutes every night looking through all the different sectors, looking at what's going on. You just got to do it. What's hot in the market? I mean, typically what's hot in the market, and this is what we talk about too, it's like, I don't like looking at stocks. You showed that one penny stock, and it's like, all right, that's interesting. I really don't like trading stocks that to me look like lower left, upper right. Or sorry, upper left, lower right. Like I like stocks that look like they're in bull trends. Now I know AA is a little different, but the volume here. But for example, like I like CF. I like the ag names. Why? Because even as the market has dumped this last year, these names are holding up really well. Oil, gas, all looks way better. Now, if you want to trade tech temporarily for the momentum, I get it. It makes sense to me. It's just, again, you can hold. We talked about NVIDIA, for example, holding the channel lows. You could trade it. Absolutely. I mean, I'm actually trading Netflix, for example. Sorry, I'm like, why did I get NVIDIA? Brain fart. Close. This one's blown out, right? The momentum has been blown out, right? Going from the 700th down to 180, 65. Well, now it's rebuilding. But is this getting back into the 700s? No. It's a trade. It's been a trade for us. It's been a trade. Higher highs, higher lows. This basing process we talked about, when it pro-gapped up after earnings, told you pull the trigger, sell, and then when it filled the gap, I don't know how many people rebought it then. Awesome trade. Said watch the channel highs. Boom. Talked about taking profits and said watch what happens in the 20-day. What happens if this, uptrend? Boom. There it goes again. Like the momentum in this is because, again, they're raising their prices. They're trying to cut out all the sharing. But do I think it's getting back in the 700 range? No, absolutely not. It's a trade. Do I think something like CF can make a new high? PXD, some of these other commodity names win the commodity bull market? Absolutely. They will go freaking monster. They will catch. Because momentum doesn't necessarily lead. Like tech isn't the only thing that has momentum. I try to show people this. If you watch one of my pinned video on Twitter, it's, who wins the tech war. It's not tech. That's the joke of it. But if you look at the monthly, like for example, U.S. Steel, I mean, this acted like a tech stock. Like if you were trading in the 2000s, these acted like tech stocks, right? I think AA didn't they restructure? I can't remember. Yeah, they had some restructuring issues. CF. Like if you traded it in the 2000s, look at this. IPO'd, zing. And now keep in mind, this is post-split many times over, but $2 up to 34. Like that's momentum, right? Like Nucor back in the day. These names had incredible momentum. And so when the momentum comes out of tech and it feeds the next bull market in commodities, because remember, money is not destroyed. It just rotates. So it's a good question. Costco earnings coming up, had pretty significant drop last week. Costco Thursday after the close. Let's go look at the chart. Let's see if there's anything popping out at us. So this is like a big retailer. You go look at the monthly. The problem with retailers, just like, law of large numbers, is like this stock has been on fire. The market cap, what's the market cap of Costco, right? I don't know it off the top of my head, but I would imagine, look at what Walmart went through and they stuck around. Check out the monthly. Look at what happened here from like 2000 on. Like it just went nowhere after a big move. My biggest concern, if you like Costco long term, is that you're probably going to be in the chop cycle, right? Anytime near the range highs. I'm looking out. Sorry, Walmart. Crap. Let me go back to cost. So that's what I'm talking about, like getting into the chop cycle. Costco is probably in that. All right. If discount is where the money's at, all right, well, then they probably hold up. But here's the problem with momentum. It's coming out. Like it's probably not going to continue higher. Like the valuations, again, you don't really know, but they're not getting. Is Costco getting bought out? Probably not. Any new changes to your commodities list for 2023? I'm assuming you meant. Let me pop that sucker up real quick. Yeah. Here's my list. If you want, you can go back and hit pause here. I gave them all ratings. Really, no real. I haven't really added any changes again because I'm still not into this point where I think the bull market is gonna rip in this stuff. CLR got bought out, man. I figured that. Solar, industrials. Here it is. I'll just stop it here for a second. Hey Dan, I have a dumb question. No, don't ask dumb. No, there's no dumb questions. Do you buy SQQ like a normal stock and sell it like a normal? No. SQQ, when you play the leveraged ETFs, you have to trade them because they have like a discounting mechanism within them where they deteriorate. This is why I always ask people, like, please don't chart SQQ. So again, I don't know what your background is, but this is a good question to ask. Like, go look at the monthly, right? Oh, the list isn't in the screen? Okay, I'll go back, Eric. Thank you. You can't hold this. You have to trade this. Right? Stop, Siri. Why are you getting crazy on me? You have to trade these names. So you go look at the daily. Thanks, Eric. I'll go back to that list in a second. I mean, you just got to trade it. I mean, I have a trend line here kind of as a joke, but when you think the SOX, because it's based off of the SOXX or the SMH, whatever you want to, this is where you go look at it. Like, right? Like, you need to trade it. You cannot buy and hold it. So, however you want it, like, again, however in your mind that works. It's just like shorting FAS or any of these, that's why I like actually shorting the leveraged bullish ETFs when it's going to go down, because now you get the deterioration factor and the momentum in your favor. Right? So, yeah, you just got to be careful. You just got to be very careful holding these things beyond a point. Like, it's a trade, right? It's just a trade. I'm sorry. Let me pull up the, here it is. My bad. All right. Let me hold it here for a second. It gets down to RS. Hit pause. Here's RS. Here's some more names. Really annoyed CLR got bought out. I thought that might happen. And here you go. Here's the bottom amount. You can hit pause, go back and look at them. I mean, I try to go through their balance sheets and look at what I thought was realistic with their debt and how leveraged they are. But good. Sorry about that. Any day you can find a stock that is up over 100%. That's not enough to bring sympathy into a name, but then out of the nowhere runs. Yeah, NASCAR, you're probably talking about penny stocks, man. I don't trade penny stocks. Because pump and dumps, I actually like shorting those names. Those are, to me, always the easiest trades, is shorting pump and dumps. Like, you're talking about going long, those stocks. I like those pumps to short them, because that's what the market makers are looking to do. They're looking to pump those things to dump them. So talking about going long, that's not the strategy. It's honestly shorting them. It's trying to realize that the momentum is fake. It's manufactured and that they will crash. So, like, how high can they go? I don't know. I mean, the pump and dumps, that's the game. It's to short them. It's not to go long them. Rothcon gave good advice that I've tried to follow stock first until you know they were right, and then the trend. Yeah, exactly. Yeah. Absolutely. Yeah. I mean, the easier is waiting for the trend. Think about how, like, when you get into a stock and we talk about once the trend starts, now you can really start buying the dips. Now you can start leveraging your in and out, right? When you get too high, you sell some off, right? Like, that's unfortunately, for example, like gold, we bought it leveraged as much as you could, but then it went, and then you pull back and said you could add here. I didn't add any because it was like already up too high, but technically you could have done that. And I mean, there's other trades. I mean, I think y'all know what we're up to, but say, for example, CF, like trading around this and knowing that you can buy the dip, fills, and talking about filling the gap. When it goes, it goes. It's just, it's so hard to, like, what's the best way to describe it? Like, to pick the bottom and know for sure. Hence why the layering in. Like, going all in at the lows is a huge crapshoot. Absolute crapshoot. So, Dan, I got to buy and sell these leverage ETFs and like stocks. We just got to keep nimble in it. Yeah, you got to be getting in and out. But this is the thing. If you think the market's peaked and you have the levels, keep in mind. So here's a great example, and we talk about this all the time. Say you're talking about SMH, right? Talking to Ken here for a second. Say off the first bottom, there's always a pullback. Off the first high, there's always a bounce, right? Like, if this is the actual top, I mean, you could wait for it to break the 20-day and buy the Soxus. Or even if it makes a new high, like, there's going to be a bounce. Like, there's very rarely do you get V bottoms without some sort of pullback, right? That V, but then even you had some pullbacks, right? Even at the top, chop tops. I mean, this one, not as much. But here you go. Down, pull back, popped up. Down, pop back. So if you're looking to short, because keep in mind, shorting is always harder than going long. Unless some sort of news comes out of nowhere that pushes like semis down, like say like China takes over Taiwan. That's it. I mean, you're going to have some sort of lower high or retest at some point. Now, is this the retest? We talked about it. If you wanted to short, you could have. I personally I'm waiting for the market overall because I'll probably see certain names that I like better to short. And if I'm late to shorting, it's okay. I just think the market and the Feds are in the sweet spot. That's the hardest part here for me to like get that out of my head because I've seen where the market gets into a sweet spot and it chops the shit out of people. And shorting doesn't work. Buy them now after regular channels or don't. Yeah. Yeah, I do look at a go long sympathy name. Sometimes the sympathy play can be more explosive than the see, the sympathy name is like the meme stock game. Like that game is over. Yeah, I mean, there's 100 ways to trade the market, but I think like the sympathy, like trash floating up, I think that's what you're referencing when you think of sympathy, because meme stocks or the stocks in the market that have been super retail, yeah, like that's the momentum that I think you're referencing. And those names can pick up, yeah. It's just you got to trade them. I mean, that's the goal, right? Like AMC ain't going back up to whatever the highs were. GameStop ain't going back to the highs. Bed Bath & Beyond. Like these stocks are done. I mean, there's probably another dozen that I'm not thinking about, but just in general, yeah, like they'll catch momentum. Once you get your trend, you can sleep on most days. Yeah, I mean, that's what I do. I mean, it's like we've talked about AA, how you can just literally sell it on like $4 or $5 pops and then just buy the dips. And it just keeps making higher highs and higher lows and trade around your position. Like once it breaks over 50, probably going to get back at minimum 55, maybe 58. Trade around it. Been so easy. Hoping oil is starting that. Maybe even natural gas if we're lucky. And this is the thing where it's hard to expect the market to dump if commodities rise in the near term, and the Feds are like, well, we're not really sure what we're going to do. So. Dan, if I have conviction and if I don't get the top on a leverage ETF like I see, but get a chop top, well, I will be fine to hold through it. Yeah, you can be fine to hold through it. I mean, it's like any other trade. Like what's your risk? Like, know what you're willing to lose. Like, if you buy the SQQ and you're layering into it, right? For example, say you want to get in around the low upper 30s. Well, say, like, in your mind, you're not allowing it to go beyond a certain point. Period. Game over. Because this is the thing about marrying, this is why I'm pissed off about natural gas, is like, staying in natural gas keeps me from other opportunities. Right? Hopefully, maybe natural gas will reverse. Because, again, who gives a crap what happens Sunday night? The opportunities cost in staying in things that aren't working. That's the hardest part. Is when you stay, and then this is where I've told people who are like, CCJ, I'm like, you could trade this, but this stock is just dead money to me. Like, I don't think it's breaking out. Well, CF moves points big in a day, and when it does break out, it goes. Well, they buying out Westinghouse, which has had tons of irregularities and accounting issues and criminal activity in the past. Like, the market ain't probably going to reward CCJ, I'm sorry. So move on. Like, that's one of the hardest things is being able to admit, like, I don't like the way the stock is moving. I'm out. Anyone remember, like this one is really like prominent, my man, EQT. Once we found out they were losing money, like they had a $5 billion derivative loss last quarter, I'm like, this is done. While other names acting much better, right? Like this name is just like crap. And this is what the hardest part is, like, hey, because, you know, your brain, my brain, whatever, everyone's brain, once you make a decision to get into something, you want to be consistent. It's no different than like why people like get into a relationship and then they can't leave, even though all the signs say this is a bad relationship. Like the brain likes consistency, and this is where the Discord room and being able to talk to each other and be honest, because again, I mean, evidence based, obviously, not just opinion. Like, you're wrong. Wrong is wrong. Dan, you're wrong. Like, this happens. This is why, for me, and this is why the better you get at trading and the more money you have in your account, the more you have to be careful, because now that you were wrong less, and you're more right than wrong a lot, it's the wrongs that screw you up. It is the wrongs that will blow you up because you're getting real good at trading, right? And you're like, well, fuck, I'm smart. I know what I'm doing. This is easy. No. It's the 1 out of 10, the 1 out of 5, whatever, that if you don't treat them like you treated them in the past, then you go right back to where you potentially started. I had to play that game of round tripping my accounts because I go, oh man, I'm really good at trading. This is easy. And then it's the one idea. It's the one problem, one mistake that puts me right back where I started. So, anyway, related to Livermore, someone on Discord. Livermore reference stocks when they hit 100, 200 big round numbers usually climb an extra 20, 30, 40%. Yeah. No, that can be any RJM. That can be any like name. Like once you get over par the first time, now think about, don't look at stocks that have been in the hundreds of levels and they come back to 100 and they move that. They typically know it's new stocks. Like when I say new stocks, it's stocks making new highs, all-time highs usually. that kind of thing is like when you get over 100, then you go. I mean, I think you can. You're probably, hey, RJM, you're seeing that with ENPH. So remember his 300s. Remember 300s. Here you go. Once you get over 300, well, you're probably gonna go to 340, 350. I'm glad you brought that up because I was thinking about that the other day and I didn't say it on the video. Remember we talked about could probably hit the channel high, maybe break over it. That's a great question because this is a relation. Because the thing about ENPH, right? Like it doesn't have a history. There's no people sitting over the top of this waiting to dump to get back to even. Like you have to, and that's why I hate penny stocks and I hate certain stocks that are like peaked. Like they don't have the unbelievable potential to go freaking nuts because why? They don't. They just don't because they're stuck in the past. Like there's people stuck behind them. So just the nature of the beast. Good question though. All right, we've been doing this for, man, hour and 20. This time flies. Love this stuff because I mean you have to think about like your brain can only be filled with so much information. You can only act on what you know. If you're not taking notes, have a journal, have like references of what to do. And if you're not involved in the Discord room, that's why I asked them, like, be involved because your questions might trigger answers that other people need to hear. Because I know a lot of this stuff, but even then, I mean, like, it's like listening to Livermore. Like, I love listening to that book because there's just like a nugget here and there that it just seems to be related to all times. Operators, operating games, always being played. All right. Any last questions, thoughts, concerns? I appreciate all of the involvement. Where's the cat? She's running around. It's dinner time. I think mom probably fed her, so she doesn't have any use for me. I'm a dog person at heart. A lot of y'all know that my dog passed away not too long ago. So I'm not getting another one. It's hard, man. You got to train a dog. You really have to spend a lot of time with them to be good. The gold fib is my favorite nugget. Yeah, I mean, there's all sorts of little nuggets out there from trading. People don't realize, like, gold is where I've cut my teeth. And if you can trade gold well, everything else seems way easier. But this is what I love about gold is that, man, we are in the cup and handle formation, and we are in the handle. It's kind of funny. People are like, man, this is down like 7 months in a row. Is it going to continue? It's probably not. That's why it's like the third month. It was like, all right, if we're going to look below it again, I think we're going to go higher. Well, here you're now at the 20 month. I still really feel like, now again, this is my opinions, and it's subject to change, which as yours should be. This area around 148, I think it's like 16 something, 1620s, just seems to be such a big area for gold. I feel like we'll get there again. Look at that big ass candle there. Bit decent volume. Look at all these candles, like just stop here. Right? I still think we get down there at some point. I don't know when. Oh god, don't know. No. We don't chart dust, bro. No. We chart the GDX. Absolutely no charting dust. JDST, dust, all that crap, no way. Nope, never chart them. Nope. Look at where the dude, I'm telling you, if you were charting Leverage ETFs, it's like trying to drive a map that's just one color. Like there's no it's just trash. Like those ETFs are meant to go lower. They're levered ETFs that were meant for intraday trading that decay on the daily time frames as they go over and over. So look where the GDX is now on the monthly. Show me the fucking money zone, right? Now you look at the daily. Here's the 200 day. Is this potentially a novice gap? Could it maybe even get up to the 50 fib? I don't know. Yeah. Yeah, levered ETFs are always approaching lows. Yeah, when the trends go the other way. Like it's almost, I mean, do you really want a chart like, for example, like JDST? Tell me what, let's look at the chart here. Let's go to the videotape. Oh, look at that. That's why I always have people like joking me. Or I'm always joking people like, hey, look at the UVXY. I'm like, yeah, the best trade on it is to short it. Here's the monthly. These aren't buy and holds. Shorting leverage ETFs is the way better trade. That's why I keep joking people like, there will be a time when the VIX spikes and the bear market crescendos, whatever, peaks. The best trade will not be buying the market. It will be shorting the UVXY. Because it will just go lower and lower and lower and lower. I mean, you can almost go, whatever the price is, it's going to go almost to zero. Remember, this thing reverse splits. Like, look at that. 1,350 down to 7. That's the best return. Now, again, long-term bull market, if you're thinking things, yes. But the easiest trade is to short the absolute shit out of these ETFs. It's not going long them. But that's the irony, is everyone wants to go long. Is my man Wild Warrior in here? He's like talking about buying the UVIX and UVXY, and I'm like, all right. I mean, there is a trade there, but it's like I would rather just short stocks and then maybe buy these things. Tops pretty much like a Liberty with all the offering reverse splits is the top crap. Tops like the card company. Well, I think Panini and Fanatics deal is gonna blow up. Is this top ships? I mean, I don't. Tops. Wait, hold on. What is this one? I can't. Man, there's so many. Is this Tops like this like trading card? I don't know. Top Ships Incorporated. Oh, what's Top Ships? Yeah, it looks like crap. I don't know what. I mean, it's got to be a shipping company. Yeah. Is this a Greek shipping company? I'm assuming. Typically, a lot of the shipping companies are Greek. Yeah. Oh, yeah. Pass on it. Yeah. Greek shipper, of course. Imagine that. Crappy company. Greek shippers. I'm not getting anything against the Greek, or the Greeks. But, man, they didn't make the World Cup. That's interesting. Yeah. Any other thoughts, concerns, ideas out there? Yeah, these companies are crap, man. I mean, it looks like a levered ETF. It's a penny. Yeah, the best trade is short them. I mean, it's like penny stocks, UVXY, levered ETFs. The best trade is always shorting. I mean, they can't even. I mean, once you start zooming out on it, it's like, penny stocks. Yep. Tesla. Yeah, people won't stay away from pennies because it's cheap. People like cheap stocks. They think they're gonna get rich on them. One person got rich that they know, or somebody post about it, or some fake social media. Or, dude, I remember, where is it? Mark. I'll end it on this one. So this was like Chinese artificial intelligence company. Eric, you still around? Y'all remember this one from the stock twit days? Where is it? It's Mark. Remark. Oh, did it do a split or something? Did I miss that? Man, this thing got up to like 15. Where is it? Ah. There it is. There it is. So there was a fake company called Crosswinds. A fake news outlet called Crosswinds. This is a Chinese artificial intelligence, and they were pumping the stock. And they're taking quotes from the CEO and all this stuff. And I told people on StockTwits, I'm like, you guys need to research this thing because it was the easiest short ever. I mean, you go and research who is Crosswinds and what all these like company did, and it was like, it's all fake. And it was the easiest short ever. And now I remember people getting real mad on stock twits. But here it goes. I mean, like, they're down to 20 cents now. To be fair, I bought AJ the day listed at 22, ran up to 12 after they held it. I mean, again, NASCAR, it sounds like you're getting, great trade location on lucky momentum names. I mean, that's your style. Yeah, then they blocked me on stock twits. Remember, I got kicked off for a little while. I mean, that's the thing, though. You're taking on bigger risk. I mean, some people are more risk averse. I told you, I hate losing. I guarantee that you're telling me all these great winning stories, but how many times do you lose, too, right? Like, how many times have you bought into these companies and they've done the opposite? I mean, I'd love to believe that you never lost in any of these speculative names, right? No, I mean, right? I mean, this company, I mean, again, I don't, the problem I have with momentum names is that you don't know. So that's where if you start shorting this, you got blown out, right? You could have layered in, I guess, right? Oh, okay, well then maybe you're taking on these trades with tight stops, which again, I get that. But people who know me know I don't sit around and I'm not going to watch the market all day. I used to do that. I used to piss in my office plant because I couldn't get away. Like, I don't have the desire nor the need to feel like I need to gamble all day in the market. That's why I talk about the intraday action. If you can trade that and you do well, like, hey, man, that's awesome. Sorry, man, whoever. Bro, friend, buddy, pal. That's cool. I just don't have that capacity because I get caught with phone calls. I'm helping people out with real estate stuff. I'm actually just trying to analyze the bigger trends and just ride them. Because the intraday stuff, I mean, that's the thing. Like, you can have tight stops on that. News comes out, market, they turn the market off on a particular name. Boom. I've been in that. Got wiped out. Murdered. Oh, stock halted. Uh-oh. Good or bad? Momentum. Stock's up too much. Halted. Oh, there went my stop. That was an awesome short. No, again, I mean, everyone's like how you want to spend your time trading, like, that's all. I mean, it's a preference, right? I am personally rather lazy when it comes to trading because I have found that the more aggressive that I was with names, the more I regretted doing the work for them. Because some of y'all heard this story. Like, I used to recommend stocks for many years. And I had like this day trading mentality, and people would be like, oh man, thank you so much for that tip, man. You talked about the stock and it went bonkers. And I'm like, oh yeah, where'd you get in? And they're like, yeah, we got in at 20. I'm like, yeah, I think I sold at 25. And they're like, oh man, I'm still holding it. It's at, 60 or 70. This would be like 4, 5, 7, 10 weeks. Who knows? I mean, it's in a bull market. And I'm sitting here going, well, shit. Why am I just like bouncing in and out when the big move is the big move? And I could have leveraged it. And that's where like my mentality eventually changed. I'm like, okay, you can see how these stocks bottom, top, whatever. Now you need to be able to ride it. Like, say, for example, AA. Now, it might not be sexy to most traders, but I'm like, man, this is easy. Buy the dip, buy the dip, buy the dip, buy the dip. It just keeps making higher highs, and you can trade around that. That's what I keep telling people. Like, I'm hoping a lot of people are going to be around for the gold bull market because it's just going to be freaking easy. I mean, there's going to be seasonality to it, but it's just going to make higher highs, higher highs, higher highs, higher lows. Certain times of the year, gold's not good. Second quarter, typically seasonal weakness. Typically seasonal weakness or strength going into June, July, then August, September pullback, and then choppiness into the third quarter, and then fourth quarter, end of it, rip. Yep. The interesting about 8 days is 90 days past that you're listening, right? Yeah, I mean, I don't know, man. That's crazy. I mean, ATXG, I mean, some of these names is like, you got to have been there, right? Seeing the SPH went on a run, yeah, but see, that's the thing. I mean, that's your style, my friend, and if that works, cool. Like, I'm someone who have to hold myself accountable, but also, too, I'm trying to help people out. Like, I don't ever want to put people in a position where they could get their ass busted, or if they don't move fast enough, they're going to get destroyed. Because that's the hardest thing, is a lot of people aren't full-time traders, and I don't recommend people actually full-time trade until you can actually trade successfully. If you get into a name like this and you miss the exit point, I mean, it's literally jumping out of a plane without a parachute. You don't know where the bottom is. So I can't in good faith recommend people who I know can't sit around and watch every freaking second of trading. I can't recommend that. And plus, I don't even want to do that because that's not my style. But does that work for you? Cool. It's just, I think a lot of people who are full-time traders, all right, well, if they can do that, great. Most people, I don't recommend full-time trading. Trying to predict what's going to happen in a 6.5-hour day, okay. Repeating occurrences, what you're talking about for monster exponential moves, yeah, I mean, if someone wants to buy a small amount, go right ahead. These, the trading, like willing to lose, whatever, have stops. But the biggest problem ultimately comes is like, what is people's focus? Like, can they do that? Are they looking for the next big boomer, or are they just looking to ride a trend and trade around it? Everybody has their desires. I personally like to know that if I step away from the computer, I take a phone call, I go meet a client, I'm not sitting here sweating at looking at my phone watching ATXG say move up 12,000% or whatever it was in one day. Like, I can't sit there and watch it every single second. And plus also too, there's a ton of mental capital that gets drained. Like, I'll be mentally drained trying to watch that. That's just, again, and that's more of a cortisone or cortisol and adrenaline rush that locks up your mental capacity too. Like, if that's what you're thinking is going to be every trade, man, that's hard to find. And again, that's where I'd rather short those dumpers or the pumpers. Again, it's personality and style. I mean, there's a reason why big money isn't really trading that stuff either. You have to be careful because big money is not gambling on stuff like that. Now, are people speculating? Yeah. Yeah, but people trade different, obviously. But like what's more secure for people's long term? And again, I'm not even talking about like just day trading versus, but like speculative trading in names. Like, you can only put so much into it before it becomes incredibly risky. That's what I used to do. And I mean, again, I'd look at names and go, oh, that's going to fucking pop. And I would get caught in the pump and dump, and I would put a bunch of money in it. And next thing you know, pow. It's great. You turn $5,000 into $100,000. And then next thing you know, you lose 75. Like, that's not what I'm trying to put myself in potential for. Again, it's like, yeah, what you said, partridge and old turkey. I'd rather play the easy trades and take time and trade around it and be safe. Because at any point, nothing's guaranteed. So if I want to add exponential risk to the trade, well, then I'm going to have exponentially less exposure. It's just the nature of it. And some people find that they do well, but I guarantee, just like anything, if they're not pulling money out of the market, they're going to grow their account, and then one of these is going to blow up in their face. Yeah, I mean, there's not really charting in a lot of this stuff. It's about pump and dumps. And again, you'll see, like you said, like if there's a lockup and all of a sudden liquidity changes within a stock structure, I mean, there is a small game that can be played with that people who do that do it well. Congrats. It's just like, trying to think of like what a good analogy to that kind of process is. It's like, I mean, it's uber focused on setups that are high risk, high reward, that also take time because you don't know what the trigger is going to be, right? I just don't want to sit around like, it's almost like waiting in a duck blind trying to fire it off at the right moment. I don't have the patience for that. I'd rather just do, and again, this personality, I'd rather do something different and just be safer and simpler. Because people who full-time trade, this is the thing about day trading. I always joke people like, you lose the view of the, forest through the trees, right? Like, you just can't see what's going to happen. Like, people, then they start becoming economists. And then next thing you know, like, they're just bouncing around between short-term and long-term, short-term and long-term. And that's where it's like, okay, well, what happens tomorrow? Who knows? Right? Like, you don't know for sure. But if you're all in all the time, well, then you're subject to what happens being that important every day. Hence, mental and emotional capital from not trading around a position. Like, people being all in all the time. Okay? Well, you better be right all the time. That's the problem here. That's like, I have friends, family, people who bought digital currencies, and they're like, I'm not going to sell any of it. And it's like, okay. Well, I love gold, silver, but I trade around it. And if it goes to the moon, great, I'll be involved. But when it's pulling back, I'll trade around it. And if it ever ends up being the top, at least I'm not sitting there with a, no, didn't make any money. Okay, the swing traders have probably been getting slaughtered. And yeah, well, NASCAR all out. Swing traders have not been getting slaughtered if they were trading the right names or if they were shorting it. So again, your assumptions on swing trading are based on what you know, potentially, right? I've been swing trading. This is one of the best years I've ever had. But it's also been shorting, going long, picking and choosing names that work better than others. I mean, it's actually been really easy. Yeah, it's been actually the easiest shit ever because there's a limit to the momentum. It's just if you're willing to wait for the extremes. This is why like people are like, when are you shorting? I'm like, I'm waiting for the sentiment to pretend that the new bull market is starting. Then we'll short and we'll find the spots. And then again, you can ride it down. Yeah, I mean, I don't want to brag about. Again, I don't really care how well you're doing. Like you're competing against yourself. So for me, bragging about how well I'm doing doesn't matter. Because I'm not going to lull myself to sleep that I can convince myself that I'm doing amazing. Well, you're only as good as your next trade. So bragging about the past has no relevance into the current situation. But swing trading has been fine. There's been absolutely nothing wrong with swing trading. Again, are you going with the trend? That's why I talk about stocks that are look lower left, upper right. They've gone higher. Stocks that have been trending down, yeah, you short those. It's been easy as pie. Actually, not always. No, not easy. But it's just, again, like long strength, short weakness. It's been pretty simple. I mean, there's always a trend. That's the thing. I don't think people realize this is like they're like so focused on. This is why we pivot from stock to stock. We try to find the better names. Like there are swing trades always occurring. Like you said, momentum follows certain names. Well, if you want to day trade all the time, great. But I guarantee if you're following us and you're pivoting when you're wrong and you're trading around your core positions, I know some of the people in the Discord room are up as much as me or more. And their options counts, they're almost up 1,000% this year. It hasn't been rocket science trading around the position and taking money out, not growing an options account to huge and then one bad trade. Because I've had a few bad trades personally, and that's the thing. That's what the options account takes the hit. It happens. But stock accounts trade around it. Done doing fine. Again, it's just how do you want to gamble? Do you want to gamble on, and just like Livermore, do you want to gamble on the speculative thing that seems very hard and take risk, or trade things aggressively that seem less risky? It's a different mindset. There's always a swing. Keep in mind, momentum, money isn't destroyed. It just rotates. And when it rotates, it gets into certain sectors and it pushes them higher. There's always something. It's just you have to be willing to look at all the different sectors. A lot of people, I don't think, do that. And they go, well, all right, well, I'll just focus on this particular kind of stock or that type. No. There's always, like commodities, as I said, since literally, posted the video in November, commodities have been better than tech since the bull market flipped. Because why? Money's coming out of tech. You want to short tech? Makes sense to me. Now, again, you can't short it all the time, but you have to know that there's ebbs and flows in the market. Again, that's the thing. I think people don't, just like I can't comment on NASCAR's systems within his game of stocks that are highly volatile. And again, I'm not saying it's not working, but it's like to say swing trading is not working, that's not true either. Like, again, when you don't know something, you don't assume. And I think that's what a lot of people do. Like, oh, well, swing trading's been terrible. No, not at all. Done pretty well. I mean, it just, again, it's how you trade around it. And this is why I specialize in what I do, because I think it's the least dangerous to swing trade the correct momentum names. But you have to be willing to pivot. That's the hardest part. Like, I'm not sitting around waiting for a stock to prove itself. If it proves itself, great. If it doesn't, I'm gone. There's If it works, it works. I mean, I don't know how many people are in Netflix, but that's been easy. It's been so freaking easy. We talked about all of it. Momentum blew out. They started talking about raising prices. Talked about they were going to cut people from sharing. Okay, we'll see what happens. Chop, 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 chop. Gaps over, gets over the gap. I'm like, at some point, this gap's going to fill. Awesome. It's not in a straight line, but if you know the more you're up, the less you own, and then you wait for dips, it's pretty easy. It's actually incredibly stupidly easy, because that's why you got to love a trend. If you understand how trends work, oh, everything has to go in a straight line. Well, no, that's where those penny stock names, that's your belief system, and that's what you're good with, great. I like the trends. I like chop. It doesn't scare me one bit. But I also don't sit around and expect to win every day or be up huge. I don't need to. Trade, more them up, less own, wait for dips. Here you go. Yeah, the context of people getting into the market. Yeah, I mean, I get it. No, I get it. The average person, again, it doesn't matter if this was 2022 or 2000 and any year. The goal of the market makers is to take the most amount of money from the most amount of people. At the peak of bull markets, they fatten up the pigs for slaughter, the fattest they're going to get. That's what they do. So the markets are, but this is the thing I don't think people realize, like even in, for example, like traded a ton of, used to trade Mosaic a lot. Agrium, they're not around. They got their NTR now. Even within this bull market run, there was chop up and down, up and down. You can see it on the daily. Man, I got to go back in the time machine. Are we there yet? Yeah. I mean, here, man, I remember this year. Man, running up there. When did it peak, right? In 2008. This is the shit I love. I mean, this is so easy. So easy. Ride it. Big pullback, boom. Hits a nice moving average, ride it. Oh, chop. Okay, seasonally, December. Maybe profit taking because it's been on fire this year. All these little things that a lot of people don't know. But when they catch the momentum, I mean, you can sell covered calls too. If you got stock, oh, man, you can print money selling covered calls. Is it sexy, glamorous? No, but you can make a fuck ton of money safely. Volatility, boom, professional gap, starts the next move. Makes a new high. Again, it's usually fib extensions and all sorts of little things. I mean, you'll see it as we get into it. Oh, just like what Custom Bob was saying, once you get over 100, you're probably going to go over to 120. Oh, you get to 110, pulls back, gets up to 120, pulls back. But also, too, the market, keep in mind, 2008 started the volatility, but these things were just like nicely rolling up. Rolling up. BTC edged on a nice uptick. Oh, man, who cares about crypto? Crypto's dead money. Crypto is dead money. All right, I'm going to let it go. Good chats. I mean, again, different perspectives. Trading is a personality thing, too. That's what's hard about this. And I know, like, what I do doesn't necessarily translate in what people want to do. Like, my channel ain't going to ever grow quickly because I don't sell to get rich. This is how you make a ton of money. I'm trying to sell you on running your trading like a business where you're pulling capital out, paying your mortgage, covering your expenses, paying your taxes, taking your family out. Again, are you going to get rich the first couple years of doing that? Probably not. But you will earn your trade size increase, your account balance increase, because you'll start realizing, like, all right, if I can make money consistently, safely, now I have a real wealth to build on versus, all right, am I just speculating and gambling? Because this is the thing, just it happens to everybody, it happens to me. Once you start speculating and gambling, the risk at some point catches up with you. No one is perfect. You can't be. You just cannot be. Because the market does things that you can't predict. Like all of a sudden, Ukraine gets taken over. Something happens. China this, China that, US this, natural disaster that, 9/11 this. I mean, shit happens. And if you don't ever take any money out, you will get fucked. It's guaranteed. So that's where you run this like a business. And once you have that business mentality, again, you know how to weather the downturns because you run it like a business. You're pulling capital out. You're not always invested. You're thinking about the markets through the perspective of probabilities. Yeah, great chatting with you guys. I appreciate all the insights. Yeah, I mean, it's interesting to see how other people trade. Feedback. You guys be safe out there. I imagine, people are talking about oil rising. Russian oil output will fall as the EU import ban takes effect. Well, we'll see. Pray for natural gas. All right. Love you guys. Appreciate everybody. Be safe out there. Please be smart. Take notes. Have your own trading philosophies and sheets. Speculating, gambling, just be careful. I mean, you can speculate with a little bit and gamble, but just be careful going bigger. Because if you don't earn it, man, you will get busted. Peace.